Boom shakalaka. I probably should put special Saturday. I don't know, man. Come on. I'm waiting for the email that I'm live. There we go. I think I got the email. YouTube, now you're live. It's a special Saturday session. I think I had what I'm going to go over. Let's see. I don't have it updated in my notes yet. Morning, Nevin. Happy Saturday. Happy weekend. I'm going to quit notes and then restart it. Let's see if I can get my notes up here. You're going to have a lot of setup with me today because I got no time frame. I got no place to be. There's Saturday. I got one request for a stock. And just, I'll get it out of the way. $249.60. That's what it is for the middle level right here. It's normally $780. The middle level is right here, $249.60 from TrendSpider. There's no 7-day free trial. There are no refunds. It is 1 year for that price. Here is the other thing, and the link is, I will put the link down below. Let's pin that link. Let me get this link. I'm going to get it right here. Sign up here. We're going to copy link, and then we are going to paste it. Boom, boom, boom. Pin. The link is up below. So if you're not on TrendSpider, that's the reason for this. They're sponsoring the weekend. Special offer just for listeners and viewers here on YouTube and the newsletter. So I'm going to be doing kind of a walkthrough for anybody that doesn't. Who was it? Steven asked me about NUVEI. Let me look at NUVEI. He's the only one that asked me about stuff. Nuvia. Subordinate voting. I don't even know what this is. Oh, God. Hoofa. This is ugly, but now the algorithm makes you loses you 60% versus 87%, losing your 87% buying and holding. It's a new stock. This does not look good. NVEIA. Nuvia Corporation, software infrastructure. Let's see what they do. Provides payment technology solutions to merchants and partners in North America and Asia. The platform enables customers to pay and or accept payments worldwide, regardless of their location. The company's solutions comprise a fully integrated payments engine with global processing, a turnkey solution. Average target price. Nobody's really putting a target. Well, August 10th. Goldman downgrades them from buy to neutral and cuts their price target in half. That's not something you want to see. SMBC Nikko, they back in April took them from 50 to 55. I don't want Global Newswire. The only. So this is a Ryan Reynolds company. Reynolds is also on the lookout for essentially less glamorous products. Shared on Twitter, showcasing his support for the company. The investment comes on the heels of Mint Mobile's recent acquisition. Nuvia, founded 20 years ago, operates in approximately 200 markets, partners with prominent platforms like Binance. Huh. It's an interesting one. Stephen, I'll tell you, the chart looks ugly. I mean, it's just ugly, ugly, ugly. What, 130 to 14 in 2 years? I mean, ignore the bounce from 25 to 50 when probably Ryan Reynolds got in. Let's see. Ryan Reynolds, this article was written September 6th, 2023. I don't know. Did he? NUVEI. There he is, April 17th. Let's go back to April 17th. We can go back to April 17th and, oh man. His announcement didn't do squat. Wow. That's bad. Okay, we'll go over that one. Let's get back into SPY. And I did confirm, by the way, if anyone wants the TrendSpider offer, again, it's $250 per year. I know, I was touting it at $400. And I'll go over a little bit more as I go over the core portfolio. But if you are currently, say you're in month 6, and I confirmed this with them, you probably need to discuss with TrendSpider Personal, but there's a code DSP68. Let's see, code DSP68. Actually, it's DSP 68, no space. I think that's what you'd put in. But say you're in month 6 of a Elite membership, so you've gotten this this level, and that's what this level, that $250 is for. And by the way, that's their cost. So the amount of money that they pay monthly to data services, it's $250. And I spoke with one of the managers that I used to work with, Earthlink, who was in charge of our partnerships, and he was in charge of some of the partnerships for data. So on Earthlink's homepage, you had like NASDAQ and Dow, and people looked up stocks, the boomers who had dial-up and things of that sort. And he, this was all the way up until, what did I leave work 3 years ago? 4 years ago? It was 2020. So it was like 3.5 years ago. He said these data folks, I mean, they don't care how many people you show data to. They just rake you over the coals, and there's certain tiers and stuff that you have to meet. But $250 is what they pay. Their hope is, and again, this is not, there's no 7-day free trial, but it's this. If you are in month 6, you can add 12 months for $250. If you are in month 1, you can add 12 more months. So say you bought a yearly plan a month ago and you want to add 12 more months because you love TrendSpider so much. For DSP 68, you can do I'm gonna die. 12 more months. So you would have for $250, you would have 23 months if you're in the month, 1 of a plan already. So, yeah. But let's take a look at. I need to write some notes down. So it's Saturday, so I didn't wake up early to investigate and do some stuff. Let's look at SPY though. And I'm going to include a lot of the core portfolio. The core portfolio was up yesterday by a lot. So we'll take a look at SPY though. Was SPY down yesterday? That is 22. I guess SPY wound up down. I know that the afternoon was not very good. We include this. We're going to pull this back a little bit. Oh, come on. I know you can get pulled back, TrendSpider. Oh, let's change it. Let's go to QQQ. Oh, I don't like when it does this. There we go. We can pull that back there. Doesn't like going back further. Let's pull up SPY. I'm going to pull it to this year. Let's pull back to, yeah, we'll pull. We're going to do this. And Brian, there's no way we're making money today, man. We ain't trading crypto. You can trade crypto. You trading futures. By the way, just so you're aware on SPY, the algorithm makes you 1.5% versus losing 2.6% over 24 months. So it's not like the algorithm doesn't work. It's just, you know, on a general basis. Hold on, I got a text. You're okay. Okay. Here we go. This is this year. I guess my point being, I mean, we're back to June. We're below the VWAP from where we were. If I pull this, let's pull it back to here. March was where we really started to kind of take off on SPY. You know, you had your January and February pop up, then you had your pullback. Broke below 4,000 on the S&P. Let me write this down. Pop in January and February. Under up to, what did we get to? 460. We'll say 460. You could. Is that a shoulder? Is that a head? Is that a shoulder? Head and shoulders? Let's go. And for people, okay, if you don't know what a head and shoulders is, Google it. Head and shoulders chart pattern. And you will find an Investopedia article. So what I suggest for people who are new or who don't listen every day and don't know patterns, if I say something that you don't understand, just go and Google it. You'll see usually an Investopedia article. This is a great video about what it is. It's never absolutely, I mean, you can see shoulder, head, shoulder. Understanding the patterns. A head and shoulder pattern is a technical indicator with a chart. of 3 peaks where the outer 2 are close in height and the middle is the highest. A head and shoulder pattern considered one of the most reliable trend reversal patterns is a chart formation that predicts a bullish to bearish trend reversal. An inverse head and shoulders, on the other hand, predicts a bearish to bullish. So I don't think I can. Let me see. Can I do head and shoulders here? Yeah, they do have a head and shoulders. Let's see. It doesn't come up with one, but I think I do see one in this. So, oh no. It doesn't see it. I see it, but it's not super like, you know, there's a shoulder, there's a head, there's a shoulder. It's not hugely. I like the triangles and wedges. We're going to take those out, though. We're just going to leave the triangles because I do like the triangles. Let's see inverse. There's an inverse. So that's interesting that you had an inverse one and then it just fell off. Because if we go to over here to Investopedia, an inverse head and shoulders pattern predicts a bearish to bullish trend. So there's an inverse with the head right here, shoulder right here, shoulder right here, an inverse, and it's a bullish trend. So interesting, but I don't believe that. And again, the automatically written ones, I mean, I see a shoulder here back in June, leading to a head, down to a shoulder, and then leading to, you know, the second shoulder portion, which is right here, leading to this downturn. So, I wish, I don't think they give me an absolute drawing tool here. Draw position, draw 3-point Fibonacci. Let's see. No. We're going to take this out. Remove all properties. Okay. I'm going to take this out. Ruler segment. No. Let me see. No. See, this is where I'm seeing kind of a head and shoulders pattern. I mean, are there head? That's kind of what I'm seeing, but I don't know. It's interesting. Remove all. Okay, so that's on the 4 hour, the algorithm. We'll say still out in the algo with no confirmation even close to the 9-day EMA and under day EMA, which would indicate if it's a pullback, start buying. Let's see, Larry Williams charting. Larry Williams charts. Let's see. I really trade. This is the guy that Kramer touts, and I like Larry Williams. Let's see. Reports. Got a bunch of. I mean, the dude just sells courses. Stockcharts.com. Stock Charts TV. Now, let's look at this dude. Let's see, news. Tools. Sort by date. We'll say past 24 hours. Nope. Nothing in the past 24 hours. So we're going to go back here. And we're going to go we have not. The only time we were in the under the 200 day was back in March, and that set us off. Under 200 day was but it was an extended period under the 200 day. You had, let us measure this. And let's measure from top to bottom. That was 5%. And we'll pull this back here, and we'll say this from top to bottom is around 5% too. Time range, we won't say that. We'll highlight this, and we'll highlight this. And we'll time range. And we're going to opacity. I guess that's the most. Yeah, there we go. Font size. Nope, don't care about that. Stroke. Ah, that's cool. We'll do stroke around that. Okay. And this. I'm going to highlight this. And I'm going to highlight this. And I'm going to highlight this. Okay. Okay. So I think I'm going to take a picture of this. We're going to download this puppy. And we're going to say, bum, bum, bum. You guys are watching me in real time do this. So there we go. And we're going to post the link. Okay, interesting. I think that's, to me, worth its weight in gold and TrendSpider. So let's go back to a weekly and back to that March. If you go back to March of this year, I mean, March doesn't even look like a pullback. And let's highlight this. Because March doesn't even look like it got under the 9-day, but this one's a little more dramatic. Or I'm sorry, this is March, so we're going to pull this back. Okay, we're going to pull this back and we're going to say, we're going to copy this. Boom, boom. Hold on one second. I'm gonna put you guys up here. Close that down. There we go. Okay. Okay, I've got those two done. Bum, bum, bum. I'm doing my notes just so you guys know. And so people can join who don't normally join. I've got some people texting me who have joined. Let's see. Okay, so that's SPY. Let's go to QQQ. Bum, bum, bum. QQQ, on the other hand, has taken a huge fall. And if we look back at March on that one, we just touched the 200-day. So this was March 2023. We touched the 200-day, 282, and then we shot off. I'm not going to highlight this one, but this one points to a similar. I'm going to do a line here and say and what's 357 plus 30%?
It's 464.1.
That's how much we would have to go up on to get to. And I don't, it's not even on this chart. Let's see, let's try and draw it. We're going to have to lower this down. Let's see. We'll take it from here to 31. Time range, we're going to do that. Boom, boom. QQQ. Oh, let me get this font. I think it's body. QQQ. Boom, boom. June. But I'm typing out my notes. 31% gain. Okay, we're going to put that in. Going to put QQQ in here. Boom. And we'll go to a weekly. And we'll show all-time highs up here. No, I don't want an arrow. I want to. That is going to be time range. Okay, I'm going to be right back. Okay. Down to nobody watching. This is great. Down to nobody watching. Okay. I like this one. So we've got this shows what? This goes from March where it touched the 200 day. Okay. And if we go okay. Yes. Okay. Oh, wait. Change percentage. Color yellow. Oh, this is nice. Does this show up? Oh, there we go. I've got custom. There we go. Okay. And I guess no. End. One end. But I'd like it on the right hand side. How do I put it on the right hand side? Font, big color, BG color. We're doing a line with an arrow. Okay, we'll just put that there. And we'll highlight this. Okay. On the weekly, we are right in the middle between 200-day and all-time highs. With an upward 50-day starting negative and the MACD just crossing down. Oscillator. And we're going to plug that in. And then we're going to move this over. There we go. Close. So we've got those 4 done. We've got a 4-hour and a weekly on SPY. Delete these. SPY and QQQ. And so let's do a little of the core portfolio now. Core portfolio. Those are good charts. I mean, come on. Those are great. Great charts there. Apple on the 4-hour got you out. Let's see. Out. Buy at a 2% loss. Let's see. Let's go to Amazon. Where's Amazon? There it is. Apple on the 4-hour. Amazon. Let's see. Amazon. Should I post this chart? I probably should. Let's post this. Oh, we're just going to do this. Arrow. No, we're going to delete that. Remove all annotations. I'm not going to do that arrow. It just messes things up. Okay. Let me see. This one is down. Let's see. Seeking Alpha. We're going to go to Seeking Alpha, and we're going to see Apple. And we're going to do advanced. What's advanced? Oh, I can do charts. Wow. Let's just do basic. We're going to do 1 month. Let's do charting. 1 month. Let's see, we're going to go back. Let's see, select metrics. No, I want to do select symbols. Oh, you two are crazy. There's nothing outside. Update chart. There we go. Down 4.6%. And let's see if download works better on the premium. It does not. Okay, we're going to put that in. We're going to and we're going to put that in there. And there we go. We got both of those. I'm writing the newsletter as we speak, and then I'll do the podcast just so you guys are aware. And if you get on here, I mean, you know, anything is welcome. That's Apple. Let's look at Amazon. Touching the 200-day and under my Okay, we're just going to put that in. The MACD. Information. Big. Okay. Let's look at Boeing. Boeing is under 200. Boeing. That's Boeing. Let's look at Bank of America. Okay. We're going to do a Cleveland Cliffs. Costco. Costco reports next week. 4 strong earnings like Walmart. $5.39 was right with that bounce. Crossing down. Of starting a position in this name. There we go. We're just going to say that. I'm going to put in a chart and we're just going to post it. Boom, boom. And put that in there. Put this there. Now, seeking alpha. Let's look at Costco. We'll look at charting. Select symbols. We'll do WMT. And we're going to take out, we'll do target. Let's do these 3. And let's do 1 year. 3 year. Yeah, I think that's a good chart. Okay. So you guys see I'm seeking alpha into my process. Shit, I'd pay $200 a year just for this charting stuff. Hey, give me a look at, the stocks comparatively. I don't know another charting software that does this, but I could be wrong. Disney. I'm not even going to cover Disney. Let's see. We're going to throw these out. Move to trash. Devon Energy. Let's do this. Oh. Did I order something? I don't think I ordered something. I don't think I ordered anything. What did I order? Hold on. Amazon just showed up, I think. But I don't think this is mine. You know what I just got? I got my Temu. Temu just arrived. I need to tell my fellow Temu shoppers. I should do an unboxing of Temu. You know what? We'll do the unboxing of Temu here in a bit. Okay. We're going to do, this is Devon versus, and we'll do select symbols. We're going to do XLE. And we're going to do year to date. One year, 3 year. Oh, you know what I have to do? Select metrics. We're going to do no. Company details, earnings, valuation, growth, performance, total return. We're going to do total return. I guess you can't do total return on a ETF. So performance, we're going to take out total return. And we're going to select symbol, XLE. Boom, boom, boom. And we're going to say download. XLE. Bum, bum, bum. Hopefully it downloads it. I'm going to do a TMU unboxing. I got TMU. What's it doing here? Come on. There we go. We're going to go over here. And we're going to delete this. Move to trash. Okay. Devon. FBCG, I don't have to worry about. I mean, that one's just kind of pulling back. Google. Let's see. Google, I like that one. Goldman Sachs. This is interesting in that we're going to take that out, remove all annotations. Okay. Coke. Yeah. We're going to do this. KO versus VOO. Update chart. Anybody have any stocks they want me to look at? You guys are better than this. That's not where the cart goes. I'm obsessed with cart narcs on Instagram. I might take Coke out of the core portfolio for this one. We got Coke, Eli Lilly. No, I don't want that one. I want this one. Boom. Lily. We're going to put that there. Lily. Okay, so we got Lily, Meta. Hit that thumbs up button. I'm going to hit that thumbs up button. We're going to go down to MPLX. I'm not going to cover MPLX. MPLX is energy. It's still a great, I mean, it's going to 38, but from a long-term perspective, I mean, it's at all-time highs. Well, not all-time highs, but you can see it capitulating around here, around 35, 36. It's pre-pandemic where it was. Got a nice 8% dividend. I can't imagine that this is going to be a killer, but I hold it. mRNA, we'll go to Microsoft. What are you yelling about? What are you yelling about? Okay, Microsoft. We'll do this one. Cover this. Move to trash. Okay. We're going to get this. And then we've got Microsoft. We're to the M's. Netflix. Okay, and Netflix. Boom. We're going to move that to trash. And, okay, Netflix. NVIDIA. We're going to... the MACD. Okay. And we'll go down here. No, body. We're good. Okay, NVIDIA is done. Move to trash. Oxy I'm not going to cover. We're going to cover that. No, I don't want that. I want to get this. Bum, 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 bum. And put that in. Okay, Oxy, we got covered. Pan W. Oh boy. Let's see. Yeah, Pan W is just low. I still got to do the freaking podcast, so not just the newsletter. Pan W I won't cover. Pepsi, let me see this. Pepsi. Let's add in Pepsi. Update chart. See, and Pepsi at least outperforms Coke over a 10-year period. Let's go 1 year. Pepsi's still underperforming. 3-year. Pepsi is kind of in the neighborhood of VOO over 3 year. Year to date. I mean, they're both doing horribly against that 6 months. Again, VOO is just a strong one. Look at the 1 month. I mean, Pepsi's doing the best, but it's only lost 0.26%. I'll do this one. We'll do Pepsi. Let me see. Pepsi, let's go to a monthly. Okay, we'll put that one there. Boom. And we'll delete those, move to trash. PXD, still like PXD to get to 250. Don't need to put that in. Qualcomm under the 200 day, it's kind of right at that support level. See, what's interesting is I drew these lines. It's held up to these lines. I mean, you're trading between that and the 200 day. So let's go here. And we'll just go. body. And then we're going to move that down. Okay, close. Roblox. No real need to cover this one. I kind of go over it. Shopify. Let's see. We're going to do support. And we're going to do it here. And then we'll draw this line. Shop. Shop goes right there. Move to trash and then close. And Snowflake I won't cover. Target kind of gone over. Tesla is going to be a big one, so I'll go over it. Okay, and we've got that. So Tesla's definitely going to be something that people are looking at. TSM, I don't think anybody cares about. Uber, I like Uber. Tesla one. We're gonna do this. Boom, boom. Okay. UNH, Walmart, XLY, XOM, VOO. VOO is the same as SPY. Okay. I'm going to start doing the podcast, I think. Get that out. We've got that. We're going to get that out. Okay. We're going to take this one and move it over there. Okay. Bum, 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 bum. Gonna look at SPY. Oh, you know what? I am going to... Okay. Saturday. There we go. I'm gonna hit record. There's my OBS. Okay. And we're gonna hit record. Welcome to a special Saturday Daily Stock Pick podcast. 2 reasons for this. First is I know I kind of, we're down in the markets. Where do you kind of go? I slacked off a little bit this week in that, hey, being patient was kind of the thing. I do think that we have great buys in the core portfolio. So I am going to go over a ton of stocks. Second reason for this is because TrendSpider last night messaged me and said, we've got a special offer just for your listeners, just for your newsletter readers. So, I have this link where you can save up to 40% on TrendSpider, $468, or you can pay $65 monthly. It's a total of $790 yearly. That Elite Pass is where you get pretty much everything that you need. And the reason is, minimum time scanning, 1 minute. The essential is daily. So my algorithm is a 4-hour algorithm. You can't do daily, so you can't run it. You can't scan on it. You would need to set up your own algorithms. But this Elite is where this is my sweet spot. The Elite Plus, I don't really need. There's a couple of things that are great in here. The trading timing with alerts, the maximum alerts, max active alerts, 25 there. Multi-factor alerts, which I use. These are what I like. And this is the sweet spot for me. I don't have more than 100 freaking alerts. It's 30 days. So every 30 days I have to renew it and I can decide, okay, did it trigger? Did it not? I can send that. This is the sweet spot for me. And again, $780 paid yearly. Here's what TrendSpider did. They're taking away the 7-day free trial. So it is immediate, but there will be a link below. There is a link pinned on YouTube up in this episode. And it's $249 for 1 year. Couple of things. I know some people signed up recently for TrendSpider. They might be saying, well, I didn't get the $249 offer. What's the choice? Well, you can add. You can add to your current, say you're on month 1 and you love it and you're going to use it for a year. You're going to use it for, the next couple of years. Add 12 months to your subscription at $249.60. Honestly, what they tell me is this is the cost of the data for them to provide you this service. And so it is the lowest price offer you will absolutely get. It goes until September 30th. I will put the details in the notes in the newsletter. Look down below for any of the notes for the dates that it's going to. But again, it's the elite level of service for $249.60. Crazy good deal. If you're a regular listener, I tout this as a way to save money with my algorithm. You hit the ground running with the scanners, with the market list, with a market watch list, all of that stuff. I provide you in a welcome letter. So it's simple. It's easy. I think you should absolutely sign up. If you've even thought about it, $250 is not much. Make sure your trading style justifies it. $250 for me with my portfolio size in that, it could have saved me just in Apple, selling that NVIDIA, how I sold at 500. You don't need TrendSpider to do that, but it's a pretty good idea to have some charting software with some back testing in order to look at that. So I do think it's worth it. Again, I'll have the links down below, but those are the two reasons I'm doing this Saturday broadcast. The newsletter today will be for every subscriber. It will be free. Typically, weekends are not for free. They're paid ones, but this weekend it will be for free. I may provide another paid one with some additional bonus stuff, but I just did so much research on the core portfolio here that I don't know how much more I can actually look at. I will tell you, SPY, we had a pop in January and February. We are back down. And by the way, the process to sign up for TrendSpider, you go to that link, you get this link. It's register, create your account. The second thing that you do once you sign up and you get billed for $249.60 is you email me. Well, how do you find my email address? It's at Linktree, linktr.ee/dailystockpick. I will change this top one to the link for $250 until September 30th. I will change that link so that you can use it. But the second thing is you email me. Once you sign up, you email me. My email's right here. It's dailystockpick3@gmail.com. I will then email you back a letter that has every link that you need to just import things into your TrendSpider. It couldn't be easier. That's the benefit signing up with me. If you just sign up with TrendSpider, you don't get my algorithm. You don't get my process. You don't get all of the watch lists and the scanners that I do. You guys watch me every day. So just take a look at that one. Understand that that's the benefit of signing up for me. But it's at linktr.ee/dailystockpick. I will put that in. Now, here are some of the charts that you'll see in the newsletter. First is SPY. We had a pop in January and February and pulled back in March to under 400. That was this earlier in this year, and I've highlighted it here. You can see we had a pop here in February. We pulled back in March. We pulled back under 400. That is very similar to what you're seeing now. This was a 4.62 move. This is a 4.7% move. The MACD was crossing up. It was down this low. The strike line is not quite moving positive. The MACD is not moving positive on the strike. You had your RSI right about the same level. So the question is, are we due for a pop? Potential head and shoulders pattern. Here's the shoulder. Here's the head. Here's the other shoulder. It's not quite potentially, but it's potential. There is no confirmation in the algo. You don't have a buy symbol here. This is the 4-hour algo. Only to other time this year where we were under the 200-day was March. This is January. So this is January where you were under the 200-day, but that started the move. You've had an incredible move here. Yeah. But the drop is super, super similar. So I do think that in the chart, highlight the March pullback to today where there are similarities. In the weekly, if you want to see the weekly, here's the weekly, and I'll close this one down. The weekly shows you same kind of thing. This is, is that? No, I'm sorry. This must be the weekly. Let me see. Yeah, here's the weekly. This is the weekly chart. The weekly shows you kind of just a pullback. The difference from today is you are significantly higher in the MACD. You are significantly higher, and I don't say significantly, but you're above the 50 mark in the RSI. So this pullback looked like nothing, and it pulled back under the 50-day. If we are going back under the 50-day, we still have a move down. So just to highlight that long-term, Short term on the 4 hour, it looks like we could see a pop. Long term, we could start to see a pullback towards this 50-day. If you start to see a pullback towards 50-day, remember, we are in a seasonally weak period, a super seriously weak period. So March was a springboard with the MACD crossing up on the 4 hour. It accelerated for a 31% gain to June. For us to get there from this point, we'd have to go to a 400. Oh, here's QQQ. Let me show you QQQ. We'll get off a SPY. So you can see the pop in March. Let me pull this back. April, March. You can see, kind of just sat there. March was a nice pop. Didn't really pull back. You saw this little pop in February on the NASDAQ, but this was a 31% gain there. I'm not saying that that's what we're going to get. Me comparing March is just, hey, the move is similar. If you think that the future is going to be similar, that's crazy. That's just nuts. Because you'd have to get all the way up here to $470 to get a 30% move on this. That would be similar. You ain't getting there. You just ain't getting there. Because here, I'll show you. Here's a weekly of QQQ. We're right in between. Directly in between. Hold on one second. Got to yell at the dog. Stop. No. You're directly in between the all-time highs and the 200-day. So you're very similar. Look at the MACD, though. This is a weekly chart of the triple Qs, and it's significantly high. So where do I think we're going? In my mind, on the weekly, you still haven't hit oversold. You're above the 50 points on the RSI. Your MACD just started to cross down. My guess would be we're still going to see some weakness because we're in a seasonally weak period. Doesn't mean that you don't add to your long term. It just means that you add sparingly. Slow it down. That's essentially what this is. Slow it down. So when I look at that weekly, that's what I see. Let's talk about the core portfolio. Well, you know what? I'm going to do this one first. Steven asked, would love to hear your thoughts on NUVEI. Good opportunity to load up. It has strong potential. So let's go and look at the chart. Because I just did this one. NVEI. NVEI is the symbol. And to be honest, it's an ugly chart. I mean, here's they probably said something about weakness. This is a financial, if we go over here to FinViz, I have this up. Essentially, they provide payment technology solutions to merchants and partners in North America, Europe and Middle East, Africa and Latin America. One moment, gotta yell at the dog again. Hey! No. But yeah, Nuvia, it's technology, it's software, it's infrastructure, it's Canadian. And Canadian. You know why this got a pop? It looks like around this time it probably got a pop. It was Ryan Reynolds. Ryan Reynolds got out of his Mint Mobile and did an interview. He said he's going into Nuvia and stated, I know about as much about in fintech as I did about Gin and mobile a few years ago. He's a good investor. I mean, he does this stuff. What Nuvia gets is his face, his promotion. Look at Welcome to Wrexham on Hulu. When did he buy? April 17th, 2023. So let's go back to the chart. Oh, by the way, there are a couple of down. This was shocking. August 10th, my birthday, downgrade Goldman, buy to neutral. They cut the price in half, 41 to 22. In April, there was an upgrade from 50 to 55. My assumption is higher for longer is going to kill this company. This is a fintech company. Higher for longer hurts fintech. So I'd be a little bit careful. Is it an opportunity? Let's take a look at some charts to see if we could trade this. Right now, it's got no confirmation whatsoever. You're sliding down. The RSI is at 18, which is completely oversold, but the MACD is still shooting down. You have your earnings coming up November 1st. If we take a look at a long-term chart of this, we can see it's still a semi-relatively new stock. It only goes back to about 2020, right before the pandemic. Right after the pandemic started. So they saw a pop here from about 40 to 130. I mean, hype, fintech, hype. But November 2021, you remember, that was the height of the market. The hype ended there. And ever since then, you've been sliding down. For me, I don't know that it's a long-term potential. I think Ryan Reynolds probably put a lot of money into this. If I, April 13th, let's see, April 13th of this year, he's looking at probably $30, $40, per share. And he's down to 15, lost half his money. I don't know what the valuation of the dollar amount was, but I can tell you he's not making money. So unless he got it at zero and agreed for his name and likeness to be, the Bollinger Bands are expanding. And that's never good when you're on the downside of the 9-day. The Bollinger Bands indicate, you can see right here, the Bollinger Band cinched up, it moved up. Bollinger Bands widened up. What did it do? It pulled back. And the Bollinger Band cinched up and it just moved down. Bollinger Bands are still wide open. I don't think for a long-term, Steven, I don't think I'd put money into this. I think if you wanted to trade it on a short-term chart, like a 5-minute, maybe even the 65-minute. Let's take a look at the 65-minute, how this one does. The 65-minute loses you 42% versus losing you 54% over 8 months. So it doesn't even do well on that. I'd say this gap comes into play, but honestly, that gap doesn't come into play until you cross the 200-day. And you've got a while to go to the 200-day because you just show no sign of strength whatsoever. So, Steven, as the only one who actually responded to the newsletter late last night, I thank you first off. But I would probably stay away from that one. And you'll see it as I go over in the core portfolio. I think there are much, much better opportunities out here. First off is Apple. And this is going to be all in the newsletter. I pre-did all of these charts. I will put all of this in the newsletter. Everything will be there. And this is how you use TrendSpider. And I've integrated Seeking Alpha into this one as well with some charts on this, which I will include in the newsletter. I don't think I can show them on the screen. I'll try and show them on the screen, but by recreating them. But Apple, here's the 4-hour. It got you out on Friday, yesterday. Recent buy with a 2% loss. Algo is still doing well. So the algo, if you have TrendSpider, run the algo. You'll see you make 40% over 24 months. 2 years, you make 24% or 40%. That's significantly better. I think the actual gain was like 30% by just buying and holding. You are under the 200-day on the 4-hour. The iPhone 15 Max is sold out with strong demand on all lines of phones. The multiple is what's killing this stock. If we go over to FinViz and we look at this multiple, remember, the average S&P is between 14 and 16. Doesn't really matter what it is. Their forward PE is 26. They're going to need to grow significantly to get to this multiple. I have no problem thinking that they will get to the multiple. The average target price is 200. Your 52-week high is 198. Year to date, you're up 34%. The most recent folks, they all put it over $200. I agree. It's a buying opportunity. Don't load up on this one. When we look at this stock, you can see it's below its 200-day. It's using that bottom part of the descending wedge as a support. There are gaps below it. Just be careful. Remember, 50% of my actual portfolio is in Apple. I don't have a fear. I sold some when it got closer to 200 in the 190s, trimmed it. I mean, we are talking a super small portion I sold. The multiple's what's killing it. We are under the oscillator on the MACD. The RSI is at 41. The stock price is under the 200-day, and it's down 7.74% month to date. SPY is only down 4.6. So this one is severely underperforming. Here, let's go over to Seeking Alpha, and we'll just pull up Apple. And I'll include the chart which shows the month to date. But look at the 1 month. And how I did in Seeking Alpha the month to date was I just went September 1st to September 23rd. And see month to date, 7.74 versus the S&P down 4.3. SPY is down 4.6, but the S&P is down 4.3. I'll include this in the newsletter. You can see it. If we just go 1 month, you can see Apple's doing fine. 6 months, Apple's doing really well. Year to date, Apple's killing it versus the S&P. 1 year, Apple's just kind of in line with them. 3 years, Apple's almost doubling what the S&P does. 5 years, Apple is almost 5 times what the S&P does. 10 years, Apple is almost 9 times what the S&P does. So you can see, I have no fear in Apple whatsoever. None. And that, again, is using both Seeking Alpha and TrendSpider to take a look at it. Now, Amazon. This chart will not be in the newsletter. So I would say sign up for TrendSpider if you want to look at Amazon. Amazon's a buy. Honestly, Amazon here, touching the 200 under my $130 price. You've got gaps up here. It's just under the 200. I said touching. I meant under. Under the 200-day and under my $130 price. The MACD is well below the oscillator. The RSI is at 29. This is oversold. I like it to fill this gap. Minimum, I like it to fill the gap between 132 and 135. I think it's going to pop back up to 130. So I like this one. I like this one a lot. Boeing. This is under $200 per share. This one is a falling knife. Honestly, right now, it's just a falling knife in the algorithm on the 4-hour. It got up to the 200-day, got rejected off the 200-day. The 200-day right now is at 220. I would say that's where it gets back to minimum once it regains some of its positioning. So I think it's $240 by the end of the year. I could be wrong. I like that one. Bank of America, I continue to hold. Just to understand, I am not adding to this one right now. This would be a dangerous time to add, but it is oversold. RSI is at 19. The MACD is super down, but you don't have confirmation. And higher for longer means weakness in financials. Just understand that. Cleveland Cliffs, clearly struggling. Having an offer on the table for U.S. Steel, symbol X. This trade is between 14 and 15 bucks. So as you get to 14.35, I think you buy it. As you get closer to 14, I think as you get closer to 15, I think you sell it. This 200 days at 14.86. That is going to be the next resistance level. Understand this one is super. Oh, I know why Amazon looked so weird for me. I was on the 65-minute. Let's go back to the 4-hour so I can show you guys some of these charts. We'll go back to Amazon. Amazon on the 4-hour, again, it's touching the 200-day. That's why I said touching the 200-day. Touching the 200-day under my 130 price, get it. Boeing, it has been a falling knife, and you can see on that 65-minute, it's still falling. I would wait for this one to have confirmation. Bank of America, same thing. I mean, just higher for longer means that this one's going to have some trouble. It's going to hit that 200-day at 29. We might have to move this one down to 25, buy it under 25, sell it over 26. Cleveland Cliffs, like I said, between 14 and 15, I think this one's absolutely 100% a trade. I think when it gets back to this 200-day at 15.56, I think you'll be okay. The Bollinger Bands, you see, they are just cinching up. This one's getting ready to go, and it's over the 9-day, which means it's good. Costco. Let's go to the pre-drawn Costco chart here. This will be in the newsletter. Reports next week, I think on Wednesday after the bell. Might be Tuesday. Look for strong earnings just like Walmart had. The algo buy at 539 was clearly the right, it doesn't get you in at the bottom, but it gets you in with a good entry price. Again, this one reports next week. The MACD crossing down. I would not be afraid of starting a position in this one before earnings. And my note is, have you been to a Costco on a Saturday afternoon? And Seeking Alpha, we can go to Costco here and just do a simple chart on Costco. We will do select symbols between some other retailers like Walmart, and we can add Target in. And so when I think of retailers, those are the three. We'll leave a SPY in there. It's S&P 500. Take a look at 1 year. Costco's up 14%. The S&P's up 14%. Walmart is up 21%. Target is down 26%. Year to date, you can see similar. Walmart is up 13%. Costco's up 23%. S&P up 12%. If we go a little longer out, 3-year, Costco's killing it. Costco's just killing it. Walmart is up 17%. Target's getting killed. 5-year, you can see Costco, 145%. Do this charting. Understand that this charting, is there for a reason on Seeking Alpha. It's a good option to do. And I liked working it into my system this weekend. Disney, we can go back here to the live charts. Disney, nothing more to say. I would not touch it before this earnings. I don't care if you get back up to 95, 96. I wouldn't touch it until that earnings. They have to show that their costs are under control. All they announced was more spending. That's a dangerous one. Devon, I would hold off on this until it gets confirmation. I fully expect them to get back above 50. Energy should be a strong sector. The one that I noticed, and I will put this chart in the newsletter, is if we go there, and now all I want to do is Devon versus XLE, and you'll see Devon has greatly underperformed XLE 1 year, year to date, 6 months. It's just underperforming XLE. So I don't want to say don't buy it because you go to 3-year, look at Devon against XLE. Look at 5-year Devon versus XLE. Energy is just one of those that you want to probably trade on a short-term basis. And right now, Devon is underperforming, which to me tells me that it's a good company with good earnings, with good management. They should start to see some type of turnaround. So I like that one. Let's go to Google. We're going to skip over FBCG, which is the ETF that I suggest. But Google, this is back at its 200-day. It's still above the 200-day. I like it under 130. Buy it. I mean, it's at 130, 160. So I don't think this is a horrible one to buy. Goldman Sachs, it broke below its 50-day. I like it here, even with the IPO market being tested. The most 3 recent IPOs that came out, CART, I forget the name of the Kelsovo or something, and ARM, all of them below their offering price. So this is why I say don't do anything with IPOs. Coke, I did an interesting one with Coke, and I think it was one of the Facebook folks. I forget who it was, but I went to Coke and I said, let me select VOO, because the complaint about Coke was it's boring. And I always say, listen, I drink cola, so I like to have Coke and Pepsi in my portfolio. I didn't realize how badly they're underperforming. Look at Coke down 2% versus VOO. Look at the 3-year. 15% for Coke. It's still doing well, and you get a decent dividend, but VOO is doing 30% over 3 years. 5 years, look at Coke, 25%, VOO, 47%. Do I expect Coke to continue to grow? The chart's a little bit, I would say this one moves to a trade under 60, it gets back to 60. Look at that range that we're bound by. So we're down at the bottom of that range. I wouldn't expect us to go under the 200-day because it's still a good company. So I'd be a little bit careful with that. I will include that chart against XLE in the newsletter. Lilly. Here, let's do the pre-made chart. It's actually there, but I'm going to show you the pre-made chart anyway. Pre-made chart, you still have 8% to go to just get to this gap. Just get to that gap, and it's 8%. Realize these are all-time highs. I like it, but wait for confirmation. You're below that 9-day. I like it, but wait for confirmation. That's going to be tough to get, anything to move up. You're going to have some type of catalyst because this one is just extended. Meta, on the other hand, this is one I really like. Everything says buy on Meta. The valuation under 18 times forward. Let's go over to FinViz. And I can probably even go to Seeking Alpha. I may start using Seeking Alpha a little bit more for some of these. But the forward PE, 17. I mean, the forward PE is 18. The Bollinger Bands, they're closing up. which indicate that this stock's going to move somewhere. It's got the 9-day. It kind of touched it down, but it's got the 50-day. The 50-day starting to move positive. The fact that earnings are coming up, I continue to say anything under $300 in Meta, I think you buy it. Microsoft, we'll talk about a little bit about Microsoft. Under the 200-day, the MACD is still moving down, but the RSI is at 32. It's oversold. It launched Copilot to users. It's growing its cloud. The multiple is why it's getting killed. I would add once it gets confirmation. The multiple is huge. I mean, look at the forward PE, 25. Look at the forward PE of Meta at 18. That's one you want to add to just on a fundamental base. This dividend is only yielding 0.86% because it's run up so much. Your average target price is 386. You are trading right now at 317. So I like it. I think it's a good one. One that I may be adding on the Brinks truck here is Netflix. This becomes a very big buy soon in my mind. I probably will grab more of it before earnings. It's under its 200-day. The MACD is about to cross up. The RSI is at 21, meaning it's so oversold, it's ridiculous. It's expensive. It's the only streamer that's making money. It's near the end of a writer's strike, and they said last quarter that they should see revenue from the password crackdown in this quarter. It's my favorite streaming platform, and I just posted. I posted in the Facebook group that the brand is just, they're loyal to the brand. But forward PE 24. That's expensive. They need to continue their growth. If for some reason during their earnings they don't show the growth, this one will get killed again. Next one, NVIDIA. This one, selling at 500 was the right thing to do. This is all selling pressure. That's what's killing this one. The RSI is just hovering down at 32. The MACD is still moving lower. I see the 200-day as support. You can see it. Couple of moments there. It kind of hasn't broken through. The yellow line is extreme support, pulling back to that gap caused by the last earnings. Start adding to this before the October event. It will pop. They will continue to get hype. Again, seasonally weak period, strong prior moves. They're up like, what are they up? Let's see. NVIDIA. Year to date, they're up 184%. You've doubled your money. I mean, that's just crazy. That's why it's pulling back. Let's go back to the live stuff. We'll go back down to Pepsi. Same thing as Coke. I mean, I'll post the chart from Seeking Alpha. Just buy VOO. That's kind of where I'm at. Let's look at Qualcomm. I like the support line. I drew that support line weeks ago. I said, this is the support line here. I think that's where it gets down to. And at this 117, I said that could be the bottom. When you get to that 200-day, I think that's providing resistance. You can clearly see it. Down here at 107, I think you buy here and sell at the 200-day, which is a 7% move. That's Qualcomm. Shopify. Let's talk about Shopify because I love Shopify. I like this one. Now, to get down, you've started covering this gap from 2 earnings ago. The extreme would be another 9% down to the support level of this bottom gap here. I like this one once it gets confirmation. Higher for longer hurts these guys. I think the move to cover the entire gap would be the support, which implies a potential of 9% downside. Dollar cost average your way down. This is one that I think is coming back. I like this one a lot. Tesla. I know a lot of people will be interested in my thoughts on Tesla. I like this. I think the 200-day provides its support. You can see it clearly just bounced off the support there. The key point is going to be the end of the month here. They're in the last week of the quarter. Quarterly deliveries is where you get the pops in this. So I think the pop will happen if you have good month. I just had 2 friends use my referral code. Friends, not like listeners, even though I include it in the link down below. These are friends. And I'm thinking of buying one because I can transfer my full self-driving. I like it here. You guys know I own this through the XLY. I like it to get back to 300. I think their dojo, that explanation that I talked about earlier this week about dojo, I like it. If it gets to a 2-3 handle, meaning $230 and change, I will like it. I will add to it. I've been burned on this one before. Uber, the European news kind of killed it, but in my mind, it's nothing because that applies to every driver, and these guys have scale. I continue to say add this slowly as it gets confirmation. I think that 200-day is going to provide you some support, but I like this one going into the end of the year. I like it. That is the core portfolio. So VOO, by the way, we can look at VOO. Let's go down here. It's part of the core portfolio. I like VOO. VOO is the same as SPY. Just I think it's a little bit cheaper. Let's take a look. We'll go VOO. And we'll select symbols. We will trash the S&P. We will look at SPY. These are the two big ones. SPY is more options than VOO, but they kind of perform the same. I mean, look, it's no different. You can buy either one. Whichever one, you want to buy, VOO or SPY, there's no difference. There's no difference in performance. There's no real difference in fees. Let's see. Summary, we can say. Here, expenses, A++. Let's see. Expenses. Here's the expensive. 0.03. Let's look at SPY. 0.03 for VOO, and it's 0.09 for SPY. I mean, it's under 0.1%. You're talking pennies. So I don't think you're hurt with either one. You can buy either one, but that's part of the core portfolio. There's your look at the entire core portfolio. I mean, I left some out, like Snowflake. Snowflake I like under 150 to get back to 180. Their earnings are coming up probably in November. So they just passed their earnings. This is just getting killed. Higher for longer is killing them. Taiwan Semi, I like this one under 100. Just you have to accept that Taiwan is, they asked for a slowdown of delivery in parts for their from their manufacturers. So they're slowing down some deliveries, blah, blah, blah. But I like it. UNH is one that, I said buy under 500. It's over 500 again. If you wanted to sell it, it's over. It's 200-day. I continue to hold this one. I'm not afraid of this gap down here. If we get down to that gap, you can see it's a little bit oversold. RSI's or overbought. RSI's at 67. The MACD's crossing up. If you wanted to sell it here, I wouldn't blame you. I bought it 480 something. So I like that one. Target, we talked about taking that one out of the core portfolio. It just has done nothing. The valuation is the only reason I continue to hold on to it. But my money is probably put better in somewhere else. And I'll probably do that this week. I was hoping that I'd get back to 119, but you can see it's got no confirmation whatsoever. Let me see. Did I go over everything? I think I did. MPLX I hold for. This is close. I was looking at this kind of live, and I just want to show you MPLX. I hold this for the dividend. And the reason I hold this for the dividend, the entire time I was waiting for this one. I was waiting for this one to get back to its pre-pandemic stuff before it started to slide here. This is 2018 when energy was strong. That's where it is. Right now MPLX puts off, I think it's been a solid 8%, 9% dividend. Yeah, 8.85%. And it's been solid. Sits in my retirement account. I get, I don't trade it. It's been a solid upward movement. It's hit that kind of top range. I continue to think that energy will be performing fine. I don't expect this one to move from 35 to 38, but if it stays at 35 and I gain 8% dividend, I'm perfectly happy. Do I think it's going back here to 24? No. So there's the core portfolio. I think that's pretty much everything. Oxy, just a Warren Buffett hold. I mean, did I put anything in? I thought I put a note about Oxy in here. Pepsi, I did put an Oxy in here. Yeah, it's been a solid Warren Buffett play. Here's the Oxy one. That's the line I put in there. Buy it under that, sell it over that. Yeah, I like that one. So, again, TrendSpider, remember, it is normally $780. It is $250. It is through to September 30th. You will see and hear a lot from me on this one. I'll be pumping it. I do think it's an opportunity for you to get in there. I do receive compensation as an affiliate of them when you sign up. But honestly, that price, I never paid that price. That is super, super cheap. Super, super cheap. And Seeking Alpha, in the newsletter, I will put some links to sign up for Seeking Alpha. They have a deal. It's a $50 off coupon. I'm an affiliate of theirs too. Just using it today, I do like it. I'm starting to work more of the chart stuff into it. I haven't gotten into some of the actual stuff like the ETF screener, top ETF stock screener. Here you can look at ETFs, top rated ETFs with a quant rating of 99 plus. I like the site. I've got one of my friends is actually doing a look at it. I told her come up with 10 stocks that aren't in my core portfolio that you think through Seeking Alpha would provide a good opportunity, and we'll take a look at those. It's less focused on charts, more focused on fundamentals and recommendations. So I like this. I think for $189, I'd probably pay $200 for this. So it's in that mid range. If I had the choice of buying Seeking Alpha or TrendSpider under normal pricing, I'd choose Seeking Alpha if I didn't know charting or if I had access to free charting like on Webull. I would probably choose Seeking Alpha if I had a smaller account and just wanted to get some news and didn't trade every day but was a swing trader maybe once a week, kind of like I am. I would choose Seeking Alpha, have a free charting program, and that would probably be good for me. With the current offer, where you're getting TrendSpider at $250 a year, I think I'd choose that one over Seeking Alpha. And I would say, let me get the algorithm, let me understand charting, and then if you don't like charting or you want to go back to Seeking Alpha and a free charting program, you can do that. But I think TrendSpider does two things. I think it works really well into a system of a person who wants to look at technical trading and fundamentals because you don't have to sit there and look at charts. I don't need to sit there and look at charts. Those alerts, like I told you, I set these up every now and then if I'm looking at something, and I will put an alert in. Like, Uber's a good example. I've been waiting for Uber for a buying opportunity. And I've had an alert on Uber to get below this 200 day. And I just haven't gotten the alert. But I don't need to sit there and look at the charts. For Uber, let's look at the 65-minute algorithm. The 65-minute algorithm makes you 45% versus buying and holding 8 months ago made you 50%. But you had a lot more safety in buying. Your wins, your average win is 2%. Your win average return is 0.45. Your risk reward is 3.21. You win 36% of the time. So it doesn't really work that well, but you're making a profit. Again, if you pick a positively moving stock, you've got some safety. So I do like TrendSpider for that purpose. But again, I hope you guys have a good weekend, and I hope you enjoyed the special recording and me yelling at the dogs. Okay, take care. Bye. Okay, now I've got to go get my laptop. There's only 2 people here, and it's probably a bot. See, you didn't need my help. Let's share this one. Yeah, it's definitely a bot in there. I'm gonna delete Uber's chart, move to trash. We're gonna share. I'll open this up, and we're gonna airdrop MacBook Pro. Trash. And okay. Sending. I think it's a long one. This one had quite a bit of me jostling around. Oh. Man, I did like, there was a couple of stocks, specifically Netflix, that I really like. Sent. Receiving. And I'm going to go put this together. You guys have a great day.